Today's conversation is with Justin Newton, the CEO of Netki. Justin is a longtime internet entrepreneur. He's led 4 consecutive companies to over $1 billion IPOs. Netki was started in 2014, and Netki is providing digital identification solutions for onboarding for crypto companies. So KYC, AML, they're effectively determining if you are who you say you are and preventing fraud for these companies. So we talked about how they do what they do, what the challenges are, what the opportunities are in the direction of ID verification, which is a hot topic in crypto, and much, much more. So here is Justin Newton. All right, Justin, we are live and recording.
Awesome.
We got a great connection, which I'm excited about. Sometimes I don't always have good connections, internet connections. Why don't we kick it off with what you're working on? So you've been working on this company, Netki, for 8 years, I believe, if I recall, a while, longer than most people tend to come into projects with. How did you, I'd love to learn a little bit about like what the impetus was for starting and then where you guys are today.
Yeah, absolutely. I'd be thrilled to do that. So, my co-founder and myself actually spent like close to 30 years doing internet startups before moving into crypto back in early 2014. And so, really the lens that we brought into the space. So when we started it was Bitcoin really back then, like Ethereum was still more than a year away when we started the company. And, the rest of the space was fairly undeveloped. But when we looked at it, what it reminded us of was a lot of the very early days on the internet. And if you think about it, its core, what the magic of the internet was, is that it was a tool that was open and permissionless for anyone to use and anyone to build on top of, coming behind what had been like a very closed and very permissioned network. And so when we looked at Bitcoin, and certainly the successors with Ethereum and others, we saw the same thing, a platform that people could innovate on top of for financial networks. And again, it being early 2014, really before even Ethereum was out or these other things, we said, it's too early for us to understand what are all of the things that Bitcoin or crypto or Web3 is going to solve. Instead, we said, what are the problems that it's going to have? And how can we help solve those problems across the ecosystem? And identity, specifically identity as it relates to risk and compliance, came up as one of those key areas and one of those key activities. And so we've really been focused in that area since that time.
And that's not what is it what you started the company doing, or was it kind of a pivot of the
It was
model?
a little bit of a pivot. One of our original product that we had out was very similar to, like, if you look at what's happening with like ENS today, Ethereum Name Service, or some of the other naming services that are built on top of Bitcoin, or other blockchains. We did a really early version of that was a wallet naming service, basically giving you an easy to use name as a way to translate to a wallet address. To be honest, it wasn't necessarily the area that we were most passionate in. We just saw it as a need in the ecosystem. And so when we saw others were coming in to fill that need and fill that gap, we pivoted to what we believed was a much more important and fundamental area to decentralized networks as a whole, which was this identity piece.
Interesting. And how do you think about, or how do you understand your passion? Like when you say it wasn't an area you're most passionate about, it's something I've been thinking about recently. So I'm curious to hear your thoughts on the difference between almost opportunity and passion. Because
For sure. So for me, really again, I'll just stepping back a little bit, the lens I brought to things. Because the thing that made me excited about working on the internet for a long period of time was the fact that it was in a network for innovation and for inclusion, right? Like, you think about today, a guy in the middle of a field, in the middle of nowhere, has access to the same information as a university professor. Like 30 years ago, that would have been considered black magic, right? Mm-hmm. And so it was a huge tool for information inclusion. And innovation, none of us could have seen Pokemon Go or Airbnb or Uber coming back in the early 90s, and the innovation continues to proceed there. So when we looked at Bitcoin, we really saw exactly the same thing, right? And other digital assets, it's a tool for innovation. And with what you see with happening with DeFi and other areas, we're seeing the early days of that innovation. But think of it more like email than like Uber. We're still in the really early days. And also as a tool for inclusion, right? And if you look, for example, at the Chivo Wallet project down in El Salvador, where last year they onboarded about 4 million people onto the Bitcoin blockchain, about 3 million of whom had never had any access to financial services before other than cash. You start to see the early phases of how that inclusion can work out. And so, for us, what we saw with identity is it's one of those key enabling technologies across all of these different use cases for cryptocurrency and for Web3 that's going to help drive forward that innovation, help drive forward that inclusion in a way that something maybe more ancillary won't.
Yeah. So are you personally most passionate about this concept of inclusion, specifically geographic inclusion, of getting people from all over the world involved in one network?
So for me, if you take kind of the lens that I have, I'm an open permissionless innovation maximalist.
Ooh, I like
sort of
that.
the way I would put it, right? Like I believe in networks that allow other people to build their dreams or to build their ideas, right? And again, I spent the beginning of my career on the internet, which was in many ways the first open permissionless innovation network. And now I'm spending the second part of my career in digital assets and cryptocurrency, which are really the next generation of open permissionless innovation networks, which we see with both Bitcoin and with Ethereum. And so inclusion, I believe, is a natural side effect of open and permissionless innovation, because open and permissionless innovation moves you forward faster on all fronts than you would move with more centralized innovation. And one of those fronts is being able to service people who may not generate as much economic value or as much economic activity. And so by the very nature of being innovation networks, they become inclusion networks as well. And so, would you say, am I very passionate about inclusion? Absolutely. I'm hugely passionate about inclusion. It's one of the reasons we're excited to work with partners like Cello, as well as projects like the Chivo Wallet project down there in places that are focused on inclusion. But to me, that's just one aspect of the value that innovation brings.
Would you keep going and extrapolate as to what drives this passion? Like what the underlying motive is to have an inclusive or permissionless network?
For me, I think a lot of it comes down to, I was very fortunate, really in the very early parts of my career, that I had a mentor that really taught me, and a lot of the people that were working around me and with me, that technology at its core and done properly is a tool for moving society forward, right? And to me, and this is something I saw with the internet and see again with these digital asset networks. What I found is that these networks, these open permissionless innovation networks that you can build on top of, what they effectively provide is a lever that's long enough that really any person can go out and pull on this really long lever and move the world just this much in the direction that they want it to go in, or that they believe that the future should look like, or be a part of. And so, for me, it was hard to find something that I could be more excited or more passionate about than finding a tool that allows me, and by extension also allows millions or billions of others, to be able to directly impact and directly create the future that they want to live in.
I like that definition, or that way of interpreting it. Yeah.
And it would have been way harder to do that if you would have had to ask, Bell's or AT&T's risk and compliance lawyers first, or if you would have had to ask, Wells Fargo's risk and compliance lawyers first, right? Because those people, for very good reason, they're paid to say no. Right. And so, at the end of the day, innovation happens a lot slower when you have centralized control. And as a result, it disempowers the individual's ability to create that future. And yeah.
What do you think about this idea? This is something that literally just lightning bolted through my head. What do you think about the possibility that there are like millions and billions of other planets where this occurrence happens, where there's life that spawns, the life gets more intelligent, it forms networks, and then there's centralization that occurs in those networks to regulate and govern the operating system of that network in the form of a government or a monarchy or a king or whatever it is. And then there's the digital layer that's laid on top of that, which initially is centrally controlled, similar to how it would be in the government. But then it's almost like it's part of the checkpoint of evolution, where that the technology of decentralization, or I don't know if I'd call it specifically blockchain, but blockchain is our version of this, is perpetuated or disseminated throughout society, such that we've had enough practice on operating together in large scales, like hundreds of millions or billions of people. And effectively, this is the Wild West, when there's no ability to centrally govern the operations on chain or in a network. And that's when like real magic can happen, because that's when you can unlock the full capability of creativity and imagination, but also the negative side of that. People have to have their immune systems, so to speak, like up and ready for schemes and scams and all sorts of things. So it's like a rocket booster to the collective evolutionary pathway. Honestly, I think I hadn't thought a lot about that, but yeah.
I think at a high level, what you're saying is absolutely correct. Right. I mean, again, in my belief, open permissionless innovation is how society moves forward. Right. And with every new technology that comes along and every shift in society that happens, we actually have to, learn about what are the new controls that we need to put in place as individuals or as society to be able to take the maximum advantage that we can of these new technologies or the new trends, while still insulating or isolating, ourselves from those risks. Right. And, that happens every time a new tech or a new technology comes along. In the early days of the internet, people had very little resistance to spam because they'd never seen it before. Right. And then over time, we developed technological tools, we developed societal tools, right? People recognized what Nigerian scam emails looked like and all those other sorts of things. So that, like, yes, spam still exists, but it's not like a societal ill anymore. It's become kind of background noise because we've evolved to develop the controls to be able to, to deal with that effectively.
Right.
And, we're going to see the same things happen here in decentralization. And there's really two important areas that it's going to have to happen in. One is an area that we're obviously seeing come to highlight. Well, both of them are coming to highlight right now. One is coming to highlight because of, fraud or consumer protection or misrepresentation or lack of appropriate representation to consumers. And that's going to drive one set of controls, probably through regulation and legislation. And then, another that's coming to the forefront is places where, cryptocurrencies may be being used to circumvent sanctions or, other money laundering controls. And a different set of controls are going to get put in place around those areas or those issues. One of the things that's incredibly difficult to do, but is important if we can get it done right, is it is 1,000 times better if the solutions to those issues are proactively created by industry and proposed by industry, rather than waiting for regulators to come along and, bring their view of what the best way to do things are. Because naturally, they're not going to understand the strengths and weaknesses of these new systems at the same level that the people that are building them are. And so as a result, it's likely that their controls are going to be more conservative. And as a result, hinder or decrease the speed at which that open permissionless innovation happens, compared to if the controls are generated or created by the innovators themselves.
I like that. How would you, either in theory or in practice, enforce the community or industry norms and standards?
So if I talk a little bit about, let's say what's been going on in the lending space recently, right? And there's been a lot of blow-ups with crypto lenders across the space where, maybe the manner in which they were managing assets may have been riskier than what they had disclosed to their clients. And as a result, they ended up with
safe to say.
Some holes in their balance sheets, right? Well, if you started seeing the good actors in the space coming out with, strong voluntary disclosures and, maybe even standards around what those disclosures should hold, around how they manage assets, what their reserves are, et cetera, compared to client assets. Even if that stuff maybe goes through a third-party audit, so people can't see the details, but they can see the result of an auditor's assessment, right, to help protect company secrets or whatever. But at least have the industry maybe come up with some standards around how they inform users about how they're keeping their assets safe, right? And so, it wouldn't necessarily be mandatory or enforced against all lenders, but those that weren't a part of the program would begin to stand out. And so it would give a way for users in the space to more accurately assess, who may be a riskier lender and who may be a better lender. And, it may not turn out to be the same in terms of consumer protection as, what a regulator may do. It may in some places be stronger. It may in some places be weaker. But, that would be a strong way that the industry, without enforcement necessarily being a portion of it, could come up with a set of standards by themselves and say, we believe that this is best practices around how this can be done. And we're willing to show that we meet those best practices so that consumers better understand, what they're able to do, or where they may be at less risk of putting their funds.
It seems the almost the articulation of the line between government intervention or regulation and open and free markets, that the divide, you could see that play out in just about every area of industry, like the medical field. To what degrees do you certify? What's the licensure that the government is involved in? Can you practice, therapy without a government license, or do you need to have one? And I think I honestly don't have a firm opinion on this. I see the appeal of having it's a carrot and a stick. I see the appeal of having the government stick for bad actors, because in the example you gave of an industry standard where it's something that industry leaders are putting forth as something that every company should be doing. Well, when there's a company that comes out and doesn't quite do it, or say they kind of do it in some really fine line that's difficult to interpret, they attract people in. And then when the thing blows up, then it's like, okay, then the government regulators come in.
I hear what you're saying. So, a couple of things there. One is, industry best practices over time do become de facto regulations, right? But it comes from the bottom up, from the way that the industry operates, versus coming from the top down of the regulator writing a prescriptive way that things should operate.
Is there
so, that's a place where, where there may be an opportunity. The other thing I would say is, I'm not sure that coming up with industry standards completely eliminates the requirement for regulation, but it may limit the scope of what the regulator needs to be very prescriptive about, right? And, my personal experience, has been that in many cases, industry better understands where the specific risks are and can therefore come up with a strong set of recommended approaches and controls that may have less unnecessary cost associated with it than something that may be more prescriptive that comes from a regulator, that may be by the nature of the fact that the regulator is less detailed in their understandings of the day-to-day of what the business is and how the risks are, may be more heavy-handed to compensate for that, right? Because the less I understand something, the more I'm going to feel like scaffolding needs to be around it so that I feel safe that it's contained.
Mm-hmm. Yeah. And sometimes, just to add on one point to that, you made me think of, is sometimes I think it can be useful to have almost like a speed limit where, the 99% of the time when you're driving on the road, the speed at which you drive is just what you feel is appropriate for the flow of traffic. And sometimes you actually throttle down based on the speed limit, like wide open highway, feels perfectly safe. You might actually feel comfortable going 95, but you stick it at 72 because you don't want to get speed trapped. And so there's like there's real limitations that happen in that latter example, but then there's the threat of enforcement that I do think keeps the industry in check in some way. Like, hey, as long as you don't go and lose all customer funds, we're going to leave you alone. To me, that feels like the healthiest relationship between government regulation and industry standards. Is there a set of industry standards, but then there's a below that?
Our hope is the combination, or my hope would be that the standards of combination and regulation would kick in to prevent things from going bad before there's a loss of all customer funds. Right. Because to me, it's great, but not really the point to be able to punish people after things went bad. The point is to be able to take consumers that, trusted the ecosystem that they came into and, ensuring that they walk away. Maybe it didn't go to the moon, but at least they're walking away as whole as possible. While, I'm not so far directly impacted by any of the companies that have been holding back with withdrawals or any of those other things in the space. I feel terrible, and I think it's going to be terrible for our industry, the impact that that's going to have on consumer confidence and things like that. Like I don't want people that see digital assets as the future to 6 months later feel like they got taken advantage of. I don't think that helps anybody.
No. And how do you distribute the chips of blame? I mean, do you put 100% on the operators of like Celsius and whoever else comes to mind? Celsius, for me, feels like the big one in the space. Do you put it on like thought leaders as well, or like industry, people with large Twitter followings and core contributors to projects that they didn't do something that they should have? Or how do you think about mistakes?
Yeah, I think there's going to be a lot of postmortems that happen to this over the coming months and things like that. And I think it's still, early to understand the details of what happened or why, or, even who's going to come out of this hole and who isn't, and where does that all play out? To me, I think that, when you hold consumer funds, you've got a pretty high level of responsibility with the way that you treat them and what you do with them. And so I think that there's going to be a fair amount to learn there about, what is and what isn't appropriate, and, how should actors be behaving in the space in terms of communicating with users, taking risk, and generating yield.
Yeah. So maybe your thought is maybe it was an inevitability that it just kind of operators at Celsius made mistakes, but it was par for the course in some way.
Well, I think when you're in an early space where people are primarily incentivized on growth, you're going to see risky behavior and you're going to see explosions, right? If you look at, the late 90s and early 2000s in the internet space, right, you saw valuations that were similarly crazy. I remember I helped take a company public in September of 99. And for Q4 of 99, we had $48 million in revenue, a $48 million loss, and a $4 billion valuation. Right. And then, in one quarter, the world changed from growth to earnings. And suddenly us and every other company that was in the space, lost access to capital and lost about 90% of our value, which we then had to try and, build back from, both in terms of changing the direction of the company from being, growth at any cost to being, okay, when are you going to make money and how much? And, we as a company, we actually successfully made that pivot at NetZero and United Online and ended up throwing off, billions in profit over time. and, made that pivot. But you can remember all the wreckage that happened during that time with pets.com and other multi-billion-dollar companies that just vaporized overnight. Now, the better part back then was, at least their customers, the most they lost was an order worth of pet food. None of their customers had their life savings there. But you also saw, similar losses in terms of people's personal fortunes, because you saw, people putting all their life savings into .com stocks. You definitely saw people at the time where, they would take out a second mortgage on their house to buy into their company's IPO, right? 3 months before the market lost 90% of its value. And so you did see people lose their life savings and lose their homes and kind of go through all this kind of cycle because the market was new and people hadn't really figured it all out yet. So unfortunately, I'll say, I guess I wasn't surprised to see similar kinds of things happen in this market and this ecosystem because there's still a lot to learn. And, frequently until there's big failures, risk isn't properly calculated in. Mm-hmm. People are focused more on growth than on risk. Yeah. And that's been traditional in the VC world, right? In the venture capital world, they would rather hit 2 out of 10 home runs and have the other 8 die quickly than have 10 companies be successful over a really long period of time. It's just not what their investing model is always lined up for. Yeah. Right. And so, when you see that happen and then those companies are providing financial services, maybe without the same level of oversight, it's maybe not shocking that there's been some issues or there's been some challenges. But I don't want to give people the pass of saying it was inevitable, because in any individual case, it wasn't inevitable, but it's not surprising that it happened to the system. Yeah. Yeah, I can see that. It's almost like the temptation is there and somebody just took the bait, because you could see that by other companies didn't, like BlockFi, Celsius. NetZero is a very similar business model and, they're doing fine, but who knows? I mean, it's hard to know, to your point, what happens behind the scenes. I don't know anything of happening behind the scenes, which is why, you won't really hear me comment on any individual company or what happened there. I don't know. Yeah. I want to shift gears a little bit to talk about identity. So maybe I'll add a little context, and then you fill in the context that you feel is appropriate. So I feel after 2011, 9/11, when the towers came down, the reaction for the Bank Secrecy Act, the BSA, Patriot Act, took the banking oversight, that particularly on banking, to the next level. With a strong emphasis on the government being able to track funds as well as track other things like cell phone metadata, but that's a separate issue. I think the Bank Secrecy Act and KYC, AML, anti-money laundering initiatives ripple into crypto today in a strong way. Do you feel that the initial impetus for the regulation, KYC, AML, the sanctions, everything that we have, if you put it all into a regulatory bucket, that how much of that is appropriately calibrated for the world of crypto? Certainly some of it is, but I would imagine there's some carryover baggage. Yeah. So, I guess a few comments around that. So, one is actually the laws and regulations around this stuff go back a lot further than that. So, one of the big controversial things in crypto with regulation right now is something called funds transfer rule or travel rule, where, identity information needs to move with certain transactions. People are very concerned about it from privacy perspective. Funds transfer rule and travel rule, that was like 1994, right? So it was way before 9/11 and all that other sort of stuff. Sanctions was, I remember it from when I was a child. So at least the 70s, maybe before that. And so all these things have actually been around for quite some period of time. And as they're being looked at and as they're being applied to crypto, there's a couple of things that are happening. One is it is a new technology area, and so there's a lot of look and focus around it. Second is the regulators are trying very hard, and many of them have become very sophisticated around this, at understanding what the real risks are on these new networks, both from a theoretical as well as an actual and practical standpoint. right? And so let me step back and talk about a couple of those items. So like from a theoretical standpoint at, a really high level, frankly, crypto is terrifying to regulators. And why would that be, right? It's pseudonymous, right? I can open up a wallet right now and no one can stop me from doing it. And if someone wants to send me funds on chain to that wallet, no one can stop them from doing it. I can do that from anywhere on the planet. And it's effectively instantaneously cross-border at a value of $1 billion, right? And so like there's a lot of things from a theoretical perspective that if you think about that and talk to someone who's in law enforcement, oh, you can move $1 billion anonymously to anyone on the planet instantly. How does that sound to you?
Yeah.
It's like, it's pretty scary, right? And then if you look at it practically and what's actually happened in terms of the risks that have occurred on the network, the volume of illicit activity has not really been that high compared to the overall volume of activity on the network. And that percentage goes down every month. And every year anyway, I'm not sure on month-to-month fluctuations, and when you look at it for the scary use cases right now that are on the forefront, let's say like, Russian oligarch sanction evasion, there's no way cryptocurrency could invisibly absorb that activity. So it's much easier to hide in the larger flows of the traditional financial system than it would be in digital assets or in cryptocurrency today. Right. And so, today, not the end of the world, but theoretically in the future could be really scary. And, what's actually happening today that drives some of the fear and the concern they have. So we do work in anti-money laundering, know your customer for digital assets and cryptocurrency. And, what I can tell you is 90% of our clients don't have issues with fraud and money laundering issues where there's a lot of, concern or activity on their network. The few that do have problems or do have attempted problems, it's the deep end of the swimming pool when it comes to bad actors. It's the Russian mafia, the Chinese mafia, South American cartels, and state-level actors. It's places where there's literally an office building where people go in for 8 or 10 hours a day, sit down in their cubicle, trying to think about how they're getting through the controls and through the money laundering issues you have because it's part of their career, right? It's literally their job every day, just like a normal office worker. For one of our clients recently, we were actually able to track literally what office building and what floor these people were working on inside of Colombia when they were attempting to defraud one of our clients, right? So we can figure out who they are, where they're operating from, what they're doing, and it's the real bad guys, right? It's not like the low level stuff, and so that worries law enforcement and those people a lot because when in the cases where they do manage to be successful, the impact of it is higher than if it's somebody that's trying to forge checks or kind of a lower level kind of criminal thing. And the final thing you can see is you can see some examples on the network where there may be indicators that some of this money laundering activity is happening in higher volume than's being tracked. And so like one example of that I would give you is consistently Bitcoin prices are lower in Colombia than in all of the neighboring countries. One might suspect that could be there's activity there where there's sellers that are willing to sell at a loss at relatively high volume compared to what they might see in other markets. Something that's been a hallmark. Yeah, so I'll jump back in. So, one of the things you can see, for example, is in Colombia, Bitcoin prices are consistently lower than they are in neighboring countries, right? And so what that means is that there's a seller in that country or sellers in that country that are willing to sell it below market rates to be able to move it into local currency. Well, traditionally, money launderers are willing to take a loss as a part of the laundering process. And so, one might imagine who may be a high volume seller in Colombia that may be willing to take, digital assets and sell them at a loss. I don't think that you need to be the CIA to figure out who that might be.
Yeah. What would be a typical discount or volume that these professional money movers are like pushing through? Like, is it
That's a great
5,000?
question. And I'm not sure that's something I have a direct view into. So I wouldn't be able to give you a great answer on that one.
Yeah. It probably varies, I would imagine, too. Um,
Yeah. And I mean, I would say the one thing I would tell you in this case is it appears, based on the amount of depression in the price, that not all of these flows, if it is what I'm suspecting, are actually being caught and tracked by the traditional analytics reports that are going on. It's not clear to me that the volumes that show up in the crime reports would actually lead to that level of price discount.
Interesting. And how effective do you think the crypto industry at large is in the tactics to stop this? I mean, is like the reputable crypto companies losing by a landslide, or are they pretty much holding the wall on this?
Yeah, I mean, the reputable companies that are investing in this are actually doing a pretty good job of stopping it. You can almost always, and a good way to look at this and to understand it is actually looking when there's like a heist, when there's, let's say, Bitcoin or some other cryptocurrency is stolen, right? You can actually track in on-chain analytics where does that cryptocurrency try to exit the ecosystem, right? So when does it get put on an exchange or other places? Well, over time, you can see that, for periods of time, there's consistently a handful of exchanges that are always at the top of the list. Well, you might guess that those exchanges typically have the weaker controls, both around identity fraud as well as anti-money laundering controls. And so the bad actors will tend to push their funds towards those exchanges. And so, many of the well-regulated US exchanges you'll see never show up on those lists. And you'll see that a number of the exchanges that have, typically avoided US regulation or regulation from other, kind of major Western markets may be more likely to show up high on those lists, particularly over a period of time.
Is there geographic hotspots? Like I'm picturing like small island countries like Malta, Bermuda, where you see a lot of crypto companies headquartered there. Are those areas beneficial for, I know they have tax advantages. Are they also beneficial for their lack of laws on this kind of thing?
I mean, there's a lot of regulators out there that are under-resourced when it comes to working on new technologies and new technical areas, right? And so if you think about, a lot of different jurisdictions out there, their regulators are barely keeping up with the banks and other financial services that have been around for decades. And so, they'll either have, non-existent regulation or very lightweight and, not very prescriptive regulation, and then very little supervision and oversight for digital asset companies that are operating in those regions. And so one of the things that you've seen happen in a number of jurisdictions, unfortunately, is you'll see places like, let's say Malta, for example, that came out as a very please come do your cryptocurrency business here. And then, what they found out was they weren't able to properly manage it. They ended up on, extending their time on an FATF gray list and have effectively become a really difficult place to do business as a crypto asset company or crypto asset business. Another thing that's coming up is in some of those jurisdictions that have lighter weight regulators, the companies are having hard difficulty opening a bank account in that jurisdiction because the bank sees themselves as having quite a bit of regulatory risk as a result of the other company not being properly regulated or having proper oversight.
Interesting. So the banks, if a bank was exclusive to Malta, it would see it as a risky endeavor to bank a crypto company. Can you say more about that?
So a bank may see it as riskier to open a bank account for a crypto company that is registered in Malta than one, say, that was registered in, let's say, a Bermuda, where there's a more active and more sophisticated regulator.
Right. So you're saying that the banks take into account the legitimacy of the enforcement arm in the country that they're considering bank. That makes total sense. But is that easy to get around if there's a bank in the country? If you move to Malta,
the bank in the country may not take you.
Oh, okay.
Right. And so, if you go and look, obviously El Salvador is super, super pro Bitcoin, right? You can't get more pro Bitcoin than the president tweeting about, buying Bitcoin on his phone naked. right? That's as pro Bitcoin as a country gets. And someone in the president's office was on Twitter like a month ago saying to the banks, "Hey, you actually have to open bank accounts for these companies, right? Like we want them here, open their darn bank accounts." Right. And so if a place where, the government, it's made Bitcoin like dollars, and Bitcoin companies are still having trouble opening bank accounts there, that helps explain what some of the challenge, can be in places that may have less enthusiastic support from the local government.
Interesting. And when a crypto company does launch their AML program, KYC program, I'm imagining they write up a AML policy. They have limits on transaction volumes that they have. They require a picture of your passport or driver's license. Are these mechanisms that effective? I mean, when I look at the interface to take a picture of your driver's license, it feels easy. I mean, I've never tried to scam it, but I mean, if I were to find anybody else's driver's license, are there like, is this, how rigid is this? Do you feel like this is fairly easy to backdoor? Are people doing that regularly?
So it depends. Mm-hmm. It depends on who you're working with. So there are certainly platforms out there that are super easy to scam and super easy to walk through. And, we actually, if you go to our website, you can find multiple customer stories from clients of ours who launched with someone else. And they literally had such a big problem with fraud that they had to shut down their front door or do something else drastic or dramatic until they shifted over to us. And we were able to block that fraud on their behalf. And so, yes, I agree. There's a ton of platforms out there where I could walk through them all day with stolen documents, lost documents, pictures I find on the internet, all kinds of other things like that. And, people that are running systems like that are frankly the networks where you end up seeing those stolen funds exit the platform, because the bad guys are looking for the people that do that kind of stuff, right? Because why wouldn't they?
Yeah.
And, the most common form of identity fraud attempts that we see is stolen document images and stolen selfies that people try to put through the platform and pretend that it's really their own. Mm-hmm. We catch all that. We just do. We can tell if the document is real and live in front of us versus a photo or a photo of a computer screen. We can tell if you're live or real. You can have the best HD video in the world in front of us, and we'll tell the difference between that and a live person. And so, if you wanted to trick our system on a human being, you would literally have to go out and build a robot model of their head where the lips and the eyes would move, and you could turn and rotate the head. But it would have to be like a full 3D model that you could then control as we're asking you to do things. And the bone structure would have to be correct on that skull. So if you made my eye sockets a little bit wrong in my robot head, we would fail.
Yeah.
Right. So like if you wanted to spend thousands of dollars for each fake KYC to build robots, you could probably get through our system. Right. At thousands of dollars an attempt. We haven't seen that happen.
Yeah. Well, that about.
But, yeah. Well, no. I mean, because we check through some of the stuff that's going on. We'd actually see it in some of the audits that we do. To give you an idea of how good we are at this and catching the fraud, with one of our previous clients, and this was years ago, this was like in 2018 or so, we were a client launched with someone else. They had such a big fraud problem with that other vendor, they shut down their front door in the middle of $1 million marketing campaign. They switched over to us. We stopped that fraud out of the gate. The fraudsters were so invested in trying to get through the system that they actually went out and were hiring people off the street to go through the KYC process. So a real ID, a real person. We caught that. Now, I would not say we'll catch that every time, but one of our analysts actually caught that the selfie background in all the selfies for these people was the same.
Oh.
And then we started looking, seriously.
Yeah.
Then we started looking at GPS data and other data, and we actually found that people were effectively being pulled in off the street to a call center. Then we actually found there was a guy whose face started showing up in the corner of some of the selfies because he was helping take photos of people. But so we do such a good job of catching fraudulent KYC that they found that the easiest and cheapest way to try and circumvent it was to actually go get real people with real IDs to go through the process for them and then hand over the account.
Mm-hmm.
So
Mm-hmm.
I agree with you that if you use a bad system, you're right. The bad guys get right through. If you use us, no way.
Well, okay. I love that. I love the descriptions that you gave and the specificity of it. When the inputs that you have as a company are a pixel. I mean, you have like a JPEG, or you have a video.
No,
right? You have a
no.
video file.
We actually run machine learning and computer vision on the device. So we're looking out the lens of the camera and then making live decisions based on what we see through the lens of the camera, and then also looking at static images on the back end. So we combine two parts of the process. You can get a lot more information in real time, right? Because I can combine accelerometer data, what I'm seeing in the lens. I can stitch multiple images together to create a 3D version of something versus a flat version of something. So I can tell the difference between, say, a real face and a video of the face, right? And so there's a lot I can do by looking out the lens of the camera that I can't do with a static image or even a video. Not to say we don't use static image and we don't use video. That's definitely a part of a process, but that's the part that's easy to fake and easy for other people to trick. Because we're looking through the lens of the camera, because we're controlling the chain of custody of all of the media from when it gets through the lens of the camera through when it's analyzed on the back end, I can do liveness on you as a person, tell that you're a 3D person moving, all that kind of stuff. I can also do liveness on the document. So I can tell the difference between if someone has an actual driver's license or a photo of a computer screen or a printout on a laser printer or a printout on an inkjet printer. And each one of those different things that you tried to do is going to come back with a different error for me to tell me what the person was trying to do to catch and defraud our system. So I can tell not only that you're a live person, but there's a live document. And between those two things, it's a very, very strong piece of anti-fraud prevention.
Can you also do this on the computer webcam? I mean, if you don't have access to it?
Not as well. We definitely try to drive, especially for high fraud use cases, to the mobile device because you can create a lot more controls there.
Yeah.
So you have a little less power, a little less control inside of the web browser. There's more that the user can do to try and fake things or to cause issues. Inside of a mobile device, like we can tell if we're running in a simulator, and we won't accept that for KYC. We can tell if we're connected to the actual camera, or if someone's trying to fake a video input or fake a static image input. Right. And so there's a lot of that also can be used to coach the user into having a more successful process. Right. Because I'm looking through the lens of the camera, I can tell the user, oh no, move the phone closer. Oh no, lay it flat so it's not as an angle. And I can know, oh shit, it's too dark. You need better lighting, or there's glare on the ID. So there's bunches of things that we're doing, with that extra intelligence, fraud being a big piece of it, but also improving the user experience because we've had partners that we've worked with before where they've put millions of users through our process who had never been through any KYC in their life before. They never opened a bank account or a PayPal account or anything. And so we had to create something that was intuitive for non-technical natives who didn't know what to expect when they got in.
Mm-hmm. Is that different? I'm picturing Jumio. They're the only ones that come to mind. But I would imagine they're a competitor and offering like a similar type. Are the players that are out there in the space basically the same type of interface? And then the magic is how you're analyzing.
There's a lot of things that they do
video that
are kind of similar to what we do if you look at it from the outside.
Mm-hmm.
But the differences from what we do are really highlighted in two areas. The first we really hit on earlier, which was the fraud prevention. When you talk about Jumios or Onfidos or those people, we stop fraud, they just don't. Right? We've seen competitors out there where literally they let through licenses where someone pasted a copy of Mickey Mouse over the picture, and it got through.
Is that right? Are they kind of are companies kind of like just throttling that, saying, "Hey, it's okay if they get through because I'd like to have the business." Because I imagine they have they're big enough where they could build it, right? It's
there's the doing the fraud prevention is hard, and there's a lot of people that focused on pass rate to the exclusion of everything else.
Mm-hmm.
And so they actually didn't develop their technology down a path that allows them to catch high quality fraud today.
Mm.
And so, look, if your use case is, letting me sign up for my Uber account, who the hell cares?
Right.
Right. Like, I'm going to put Mickey Mouse in there. Someone's going to get one free ride, and then, they're going to get shut down and the problem's going to get solved. Like, the cost of fraud is very low. But, when you're dealing with digital assets and the cost of fraud can be millions of dollars, and those millions of dollars can disappear instantaneously to a place that they won't come back with, then doing the right job, it becomes much more important.
Yeah.
And we've provably saved our customers more than 10x in fraud prevention, what we've been paid in fees over the history of the company.
Interesting. And how many engineers and how big is the team that made all this?
Yeah, so the team today is about 15 people. The majority of those are on the engineering side. We've been heavily focused on product side, and really have only pivoted over to focus more on go-to-market in the last year or so.
Mm. Where do you think it goes in the future? I mean, fast forward 10 years, where do you see the industry of identity validation? Is it like a smart contract that people have that's bionically connected in some way, or?
Well, I mean, I definitely see, what's happening with the W3C verifiable credentials and decentralized identity is going to be a big and important part of the future.
What is that?
I think that the trend. So it's basically, the idea is that, let's say I would take you through a KYC process, and at the end of the KYC process, I would issue you a credential or a token that's tied to a private key you own. And then when you wanted to prove who you were to someone else, you could just hand them the token and then sign with the key to prove that ownership, to prove that you were who you said you were. So instead of having to show them your ID, they could just accept this piece of, this digital token and the signature as a way to accept things. So, that could be super useful today in use cases, let's say signing up with Amazon, with eBay, with all kinds of different places where you need to fill in information about yourself. But regulators today don't accept it as a valid way to do KYC and AML. They just don't trust it because it's a new technology and they don't understand what the risks are around it yet. I think if we fast forward 5 years, regulators will be further down the road with it. And so we'll start to see reusable KYC and reusable identity as a part of the way that things get done. In 10 years from now, I think it may be the primary way that KYC and AML is done. And so we're actually working with the number of the platforms that are developing this new Web3 or Web5 identity on developing the standards around it, as well as being the first validator on those networks, because we see where the industry is going around this and want to be developing not just the technology, but the new business models that are going to drive that future.
Do you think that'll evolve into like a kind of credit score where at first it's identity on chain, single?
It's not on chain, by the way, because you don't want to publish the data for everyone to see. You want to put it in a private wallet so that you can share it with whoever you want to share it with, but no one else is even aware that you have the credential. And I'm sorry to interrupt you there.
No.
But to jump down maybe a little further where you were going, credit will, I think, be a part of that, right? So like, I may go and, let's say I go through and I go to open a bank account, and my bank now needs me to go through a KYC. Right. And it turns out I'd already been KYC'd to open a brokerage account somewhere else. So I now have a credential I can use for that. They trust the issuer, so I can use the credential to log on and do the KYC and AML. Well, they may now monthly issue me a credential that gives an idea of what my balance is, so that I can then go, if I'm trying to get credit, and I can share information about what my balance was. And my employer may issue me a credential around what my annual salary is, right? So that I have something that I can share around that's up to date. And then they have the ability to revoke that if that information changes, right? And so, yes, there may be a credit agency that issues me a decentralized credit score that I can share. But it may also be that I'm just issued the information that allows the counterparty that I'm working with to make that decision on their own based on those kind of sub pieces that I was given. And so there's kind of two ways the model could work. One is we could stick with like a centralized authority that gives me a credit score. And that's probably going to be the immediate path that things go to. But over time, may see that become more decentralized, where, there's, now that the user has all the information in an easy to share way with whoever it is they're applying for credit from, right? They can now use that as a way to disintermediate credit scoring agencies.
I hope that happens.
Yeah, right. I mean, why wouldn't it just be that a financial institution licensor custom creates an algorithm to process the data on their own once there's a standard on how that information can be stored and shared?
I think that
in a trusted way.
Right. I see the upside of centralization in that there is one place that a merchant would go or a retailer would go to log the experience that Justin had with them. So like if you go to the dentist and you rack up a $12,000 bill and you just decide to not pay, the dentist would be nice, and it is nice today that the dentist has the ramifications. They could pass it to a collections agency. The collections agency could log it, and there's a negative externality for not paying the bill.
Totally.
If that were to happen on chain in that way, would it be anonymous? So the same mechanics are happening where it's an account, but then either it's a smart contract in the way that the data is not publicly accessible.
Well, again, I would be really concerned about keeping that data anywhere near or on a chain.
Yeah.
Right. And the reason for that is once the data is near or on the chain, the thing you're assuming is going to protect you is pseudo-anonymity.
Mm.
And like it only has to get broken once to be broken forever.
That's true.
And so like PII like that is something that you want to both encrypt and hide. Not just count on either encryption or hiding it to protect it because it's such personal data.
PII, personal identity information?
Personally identifying information.
Yeah, right.
Yeah.
It seems like that feels like the nut that if you were to crack that, if we collectively as society could have effectively credit scores in some manifestation available to crypto companies, then you could have loans where you actually borrow more money than you're putting down in the collateral of the loan, which would then make traditional finance really on their heels. But today that's not happening.
Certainly the early attempts to do uncollateralized loans have not gone well.
No. Yeah, there's no ramification, right? Like, okay, I borrow $50,000 from my bank. Great, I don't pay them back. What happens in reality? Like somebody is knocking at my door. There's phone calls. There's letters. There's jail time. Like it's going to happen, and or you just run and you're a fugitive, which is like that's not a life that's desirable by anybody because there's real ramifications. It's almost like the pseudonymous the anonymous state of the lender or the borrower makes it so. I mean, here's a question for you. Maybe I'll articulate it this way. You could either bring credit on chain or you can bring enforcement of on-chain lending off-chain into the physical world. Of those two scenarios, which do you think becomes more viable and widespread?
I don't think it's either or. I mean, I think it's going to be a combination of both. Right. I mean, and I think frankly, again, go back to watch how Celsius and some of these other places unwind. And you're going to see, a combination of smart contract-based enforcement and court-based enforcement. Right. And, one of the things I think is interesting to watch right now is it appears that, Celsius is trying to think about how do they deal with all of the smart contract-based enforcement in the way that they want to deal with it before they enter into bankruptcy and lose some control over those decisions. And so if they're entering into bankruptcy, which who knows, but it's certainly interesting to watch how the world of CeFi and DeFi and, courts and smart contracts are going to interact in the unwinding of a lot of these different issues that are going on right now.
Are there any particular topics or ideas that you feel are contrarian, things that you believe that other people don't, either in crypto or elsewhere?
Honestly, like the most contrarian thing that I used to say, now everybody's saying. So I sort of lost that one, which was the idea that, bringing in regulation is actually going to be a thing that leads to more of the mass market and more of institutional capital coming into the space. When I was saying it in 2015, it was very controversial and not a lot of people in Bitcoin wanted to hear it. But I think these days, I think many, many people in the space are saying exactly the same thing, that, getting the right regulations in place is actually going to be the key to the next leg up in growth that we see in the ecosystem. So I guess I'll have to find something new contrary to say.
Yeah. Well, I'll tell you from many of the guests I talked to who are running substantial crypto companies, like that's the biggest complaint is I wish there was more clear regulation in the space so we can know what we can build, what we can't build, and constraints on the system, because it's costly to go out and build something and then have it be illegal and you have to change it and blah, blah, blah. So, yeah.
Totally.
Justin, where are you on the internet? Are you tweeting? Are you writing? Do you want to throw out any personal? We'll have all the links for Netki in the show notes. Anything on the personal side?
Yeah, my Twitter is at Justin W. Newton. And I think that's actually my handle just about everywhere. So you can always find me there. Definitely Twitter's the social that I'm more active on than some of the others.
Cool. Any particular people or books you want to throw out there as those that have inspired you or educated you?
So I'm going to go another way. I'll go with, there was a documentary series on the BBC in the 80s that was called Connections by James Burke. And if you look at what that was, it was really, and it was what inspired and started my whole career. It came from the mentor I was talking about earlier. He made us watch this, but it literally would start with like a sharpened piece of flint for an arrowhead, and then carry that through the technology and cultural journey to the space shuttle taking off. And like, what were all the changes of how technology influenced society, and then society influenced technology, and technology influenced society to get from the arrowhead to the space shuttle. And, to me, that kind of like systems thinking of how does society and technology influence each other was probably the biggest driver of the way that I approached my career in both the internet and in crypto. And really thinking about these as platforms and tools to drive societal change and to build the future that we all want to live in.
I like that a lot. And so did that line of thinking help you to see what was coming or have greater conviction about what was coming?
Definitely. Yeah. And in particular, well, first of all, it allowed me to see that, when we were building the internet, we were building the future that we were all going to live in, which I think has turned out to be true. And, getting to do it a second time around, with digital assets and with cryptocurrency, it's kind of even refined it a little bit further, which is like, because we're so at the middle of this stuff, every single decision that we make is actually going to have an impact on the future world that we live in. Right. And so we need to be super careful about where are the places that we're taking what we think are going to be temporary shortcuts, and what are the long-term repercussions of those decisions going to be. And like, if we are really doing it temporarily, how do we make sure that we fix it before it becomes a permanent fixture of the future and we're dealing with some of the trade-offs and disadvantages of that. Right. And so like, if I give you an example of that in the early days of the internet, like all of us that were working on core internet infrastructure knew that the right thing to do was to encrypt all traffic on the internet. Right. But like with scalability and everything else that was going on in performance, like encrypting everything was like another insurmountable hurdle to deal with. And we said, oh, we'll deal with it later. And, what that led to was, warrantless wiretaps and NSA spying online and all these other negative side effects that really shaped, frankly, how a generation has perceived the government because of some of the excesses that have occurred as a result of that decision that we made 30 years ago. And so, when we're thinking about and making trade-offs today in digital assets and cryptocurrency, that's something that's always sitting and resonating in the back of my mind is, what are the downsides of the trade-offs that we might be playing now? How is that going to impact us in the future? And how can we start to build the safeguards to that into place now, rather than waiting for some of those negative side effects to show up?
Interesting. Can I ask you one last quick question? If you weren't working on Netki, what would you be working on? What idea would you be tackling?
That's a good question. I think probably given my background and some of the other stuff, I would be looking at decentralized internet right now. And how do you actually build the layer one networking layer of the internet in a scalable and decentralized way that has the appropriate incentives in place to allow it to scale and be privacy preserving and all those things.
Interesting. I dig it. Justin, thanks so much for your time, man. I hope you guys keep crushing it, and I wish you nothing but the best.
Awesome, man. Thanks for your time today. It's been a pleasure to chat with you.
Thanks, buddy.